It is very challenging to anticipate the residential real estate market. You know the pieces of the equation and use your intuition, but ultimately you're going in blind. This is how it felt for the last year and a half. Seasonally, we should see close to 80% decrease in active listings from August to December. The inventory decreased from July to August as expected, but then it increased in September. We ended the months with 3,971 active listings, 10% increase from the month of August. 3,971 is still very low. Last year in September we had 5,300 active listings, and the market was extremely competitive then. In September 2006 we had 31,000 active listings on the market. That is to put things in perspective. Well, current sellers may not have as many bidding wars happening this time. They're still likely to get the price that they want because of how low our inventory is and how high demand is. We continue to see more houses have been purchased this year than any of the previous 5 years. This trend will likely hold for the remainder of the year, but if interest rates increase, they may not be the case next year. The August appreciation value at 17.7% year over year is the highest we have ever seen. So I would be cautious to say that the market is slowing down. There are signs that moderation is coming in the next months and throughout the year, but the experts are still expecting to see 11 to 12% of annual appreciation in August 2022. The big question in everyone's mind, when is the housing bubble going to burst? Well, it's probably not going to happen. We're in such a unique time, and all the data and signs indicate that we won't have a house bubble as we did back in the early 2000s. Why? We are at a 40-year low in inventory, and supply just can't keep up with the demand. And this is the number one reason. Population growth is number two. The millennial population born between 1981 and 1996 is hitting their 30s, and that is when the home button kicks into high gear. Wages are number three. Only 3.4% of income is going towards mortgages now versus 7.2% that was going towards mortgages leading up to the foreclosure crisis 15 years ago. So thank you for listening, and I hope I'll see you next month. So we'll see what's going to happen in October. This is Anna Merrick with Metro Brokers Impressions Realty.